Welcome, everybody, to the Thursday edition of the Not Your Average Investor Show, the JWB Rental Income Property of the Week. Yes, I'm your host, Pablo Gonzalez, and I am remote from Miami today. So I have this background that's literally the view I have outside of my balcony at my best friend's apartment. Not too shabby, but an even better view is the fact that I am joined by two titans of the Not Your Average Investor community. Two of my best friends these days, to be perfectly honest. We got the MVP of the Not Your Average Investor Show, Lee Bishop. Say hello, Lee.
Hello, everybody. Nice to be here with y'all.
And we got the fairy godmother of the Not Your Average Investor Show, Jen Filson. Say hello, Jen.
Hello. May all of your real estate wishes come true.
There it is. And the MTM, the one that brings us the moments that matter, Madison the Magnificent. Say hello, Madison.
Hello, everybody.
It is great to be here in the house. Gregg is away with his business partners doing some business planning. And when the cat's away, what happens, y'all?
We all play.
The inmates run the asylum is what I like to say. All right. So we're doing the POT dub today, but we're doing it with a panel. We're going to talk about a couple things of, what Lee's been up to these days. Jen just got up to 6 rental properties. We're going to talk about all of it, what we're seeing in the market. What are the things that we are considering as investors these days? And if you are watching us on YouTube right now, I highly encourage you go to jwbshow.com and just sign up and come in here live in the chat, make some friends. We got a vibrant community that's already participating in the chat. If you are listening to us on the podcast in the future or the replay on YouTube, go to nyais.com. Check out everything we got over there. Sign up for one of these live shows, show up live. And when you do, you get to be part of what do we do here in the beginning, folks?
The cool game. The roll call.
Roll call, yeah. The Cool Kids Club. The roll call. Let's go. We got our leadoff batter of the community, John Hannon, kicking us off. Good afternoon, everybody. We got Leo Faraganan.
Faraganan. I came up with that. Thank you very much. That was my deal. Yeah.
You're right. That is the best community generated nickname thus far that hasn't come from my own head. I love it. Leo says good morning. Hey Ken, hey Jen, hey Pablo, and Madison and Lee. Let's rock. Love it. We got Bill Shields with us. Buenas tardes, amigos. We got Aaron O'Neill into the lights. Aaron O'Neill engaging in the community. We love it, Aaron. Who else we got in here? We got another not your average guest saying way to go, Jen. And we got Madison checking in. All right. We got the crew in the house right now. Let's kick it off to what I like to call my favorite segment. Do you all know what my favorite segment is?
Madison the Magnificent.
Madison shares good news.
It's Madison shares good news. Give it to us, Madison.
All right. So you've heard me say it before, and you'll hear me say it over and over again. JWB is the best company I've ever worked for. And I'm not the only one who thinks so, because Jacksonville Business Journal came out with an article announcing JWB as one of the best places to work. They gave us a score of 92.5 out of 100 on their ranking scale for best medium-sized companies to work for. So I actually have an article for you guys. I will send it in the chat if it'll let me. If not, it'll be in the Facebook group. But a testament to this company and just how well they treat their teammates. So.
Woohoo! That's awesome.
Yeah, that is the JWB culture is something that when you get involved, it is impossible not to notice, right? Like I remember for me.
Yeah, I thought it was fake when I first got here. I was like, they're putting on a show. It's because I'm new. And I've been here almost a year now, and it's stronger than ever. It gets better and better. So
Madison, as a bright young professional with a really, really great future, when you experience that, like what does working in a place that is like a best place to work culture thing, what does it do for you, for your career? What does it make you think?
It makes me want to grow in this company and give my best to it because it's giving its best to me. And also, if I don't think this will ever happen, but it changes my perspective of other companies as well. Like I'll talk to one of my friends who works with another company and she's like, yeah, I have to choose if I want to take Thanksgiving or Christmas off. And I'm like, well, that sucks. Like, it just makes me completely think differently of other companies. And makes me realize how fortunate I am to have found JWB. So.
Yeah, totally. I have that conversation with Greg all the time. This idea that, it's not just to me, it's this like magnificent, having the best team in every scenario is the thing that wins, right? In sports, in business, however you want to look at it. But this impact that they're making, right? Like this idea that now that you see it, you can't unsee it. Once you work at a place with a great culture, you're never going to accept a crap culture ever again. And I think that's so awesome to like have learned at a young age.
They say it here, the best assets is their team. So that's where they're going to put their investment is in their team, and it shows. So
very cool. Very cool. You know what, Madison? That's good news. Awesome. All right. I also want to welcome, we got some late check-ins here in the roll call. I want to give them their due here. We got David Blattner checking in. Welcome back, David Blattner. We got Bill Green. Good morning from the mountains of Colorado. Bill Green, it must look exactly like this outside for you, right? Same thing, Colorado. We got Gary Riley in the house. Gary, welcome back. We got Tony D, folks. Anthony Ditta from Jupiter. We got Catherine Schiffer checking in. A bunch of names that normally don't participate. I love this. Thank you so much for checking in. Bill Green saying you discovered us from Ignite. Bill, love that, man. I love that you discovered us at Ignite. That was a fun time in Vegas. We just did the recap show. And who else? We got Audi Ratanawelu. Rowdy, let me know if I destroyed that or not. Saying hello, everyone. First time joining the group from Palmdale, California, North LA. I love it. Thank you. Welcome to the family. Make yourself comfortable. This is an audience-driven show. If it's your first time here, this is kind of a unique show to be a part of, because normally the co-founder of JWB, Gregg Cohen, is here. So, he's got some amazing messaging and things to add to the conversation, which is great. But when he's not here, it means that you're getting unfiltered opinions from people that don't work at JWB, right? We are all investors. Lee's an investor. Jen is an investor. I'm an investor. JWB is my client as a marketing agency that I'm a part of, and we produce this show. So you're getting the unfiltered, straight, good stuff right from the source. So that being said, let's start with what's going on in the investing world for you. Lee, what are you seeing right now? I know that you bought a bunch of properties with JWB over the last couple of years. Now you're doing private money lending and you're doing some more active stuff and you're building that business. What are you seeing in the real estate world? What are the conversations that you're having? And what are people afraid of, or what are misconceptions that you're hearing right now?
The misconceptions everybody has is that, oh my God, I won't be able to afford a house. And they're not wrong. I mean, honestly, the interest rates going up is making it more readily available for real estate investors to purchase homes that first-time buyers would not be able to get into, and we would be able to rent those homes to those people. So we're providing a service as real estate investors that, this is the time of year that everybody is, they say it's all cycles, right? So right now the cycle is everybody needs to be doing their buy and hold. So 6 months ago, everybody was selling, or a year ago, everybody was selling their inventory so that they could take advantage of the next trend. And the next trend today is to do this buy and hold. And then you're going to hold it for, say, 5 years. When the market starts leveling off, you might start depleting your inventory and start purchasing new, right? So you're always going to be in a flux. You're always going to be processing. Every time is a good time to buy, especially when you're a real estate investor. And these buy and hold scenarios are looking really good because there's a lot of lenders out there that they have the money to lend, and they're getting it out of the stock market so they can look for places to put this stuff. So that's really what's happening. I mean, it's a phenomenal thing. So last year I decided I'm going to get into the money lending side on this side. And on this year, I'm ending up doing a lot of commercial stuff. I'm in the middle of commercial stuff where people who are, selling their single family homes want to get into these apartment buildings and stuff. So it's kind of like that new trend is coming around, multi-family homes and all. It's just amazing.
Interesting, man. Yeah, that's good perspective, right? Like what I'm hearing from you, number one, is there's different seasons of real estate, and there's like short-term kind of thinking and there's long-term thinking. Right now we're in this, but it's always a good time to buy, depending on depending on your strategy. It can be a good time to buy at all times.
Right.
and we're in this like buy and hold period, right? Like it reminds me of the saying that it's like, you know, a couple of years ago, it was too scary to buy real estate. Then it was too hot to buy real estate. Now it looks like it's like too expensive to buy real estate. But at the end of the day, it's not about like when is the right time to buy. It's not like, should I wait to buy real estate? It's buy real estate and wait. The buy and hold strategy will, in a long market cycle, will always work out. We talk about it a lot on the show. Jen, you have a really unique perspective in the sense that you, man, I was just talking to you on the phone last night. You bought 3 homes this year. Like, you are not waiting, right? Like you were an active part of this community for the past couple of years. And for whatever reason, in this moment, when everyone's freaking out, you're going all in. Why don't you tell me what you're seeing? What is making you push your chips to the front of the table?
Limited time before I'm of the age where I want to retire. I mean, if I'm going to build a portfolio of 30 properties to make sure that I have 2 nickels to rub together when I'm 100 years old, I got, you know, I'm 52, so let's do the math, right? I've got to do a lot. So, and just like they say, you know, every day is a good day to buy real estate. And I have been guilty of, for so many years, looking at properties that were too expensive and then they went up and it's like, damn it. So I can play the game forever of waiting for the bottom of the market, but it's not going to happen. I mean, it's just, I mean, really, I keep, especially out here in Monterey, California, prices are ridiculous. Come on, right? Just stupid. And we live in a 900 square foot apartment in a duplex. It's a $1.3 million shack is really what I live in, right? Because I'm 7 blocks away from the ocean. But the point is that, yeah, who can afford to buy it? So let me tell you how cheap Florida looks like to me. So yeah, everything's a deal. It really is. So I guess it is a unique perspective, but prices are only going to go up. And keep in mind, Jacksonville is a supernova city. It is growing. It is attracting so many people. So the appreciation of these properties are going to go up for sure, without a doubt.
As you're talking, Jen, I'm thinking about Real Estate Ignite, and I'm thinking about when, who was it? I think it was Paul Shively that broke down. No, it was Paula Sajan that broke down the rule of 7, right? This idea of taking the IRR, dividing it, or what is it? It's like you take the investment dollars, divide it by 7, multiply. God, I'm messing it up. Lee, do you know how to explain the rule of 7? I have the notes here. Give me 1 second. You take the investment dollars. 72, rule of 72. 72 divided by the IRR multiplied equals how many years it takes to double your investment, right? So as I was doing it, I was thinking, man, I got in at 40 and I'm buying these properties, but I'm like doing the math and I'm just like, man, this is so much better than anything I would have thought in the stock market. And I thought by 72, these 3 properties that I bought are going to be worth $4.4 million, right? So like, I'm thinking about you and just like getting in at 56, man, you're still there. You're still there in this like rule of 72, right? With these like 12% IRRs, it's every 7 years, it's going to double, and you've pushed all this stuff to the table. So by the time that you're 72, it's going to double, another, what is it? So from 56 to 7, it's going to double like 3 or 4 times just from the stuff you bought right now. But the stuff you have bought before has been sitting there doubling every 7 years. And I just think that that's remarkable. And I don't think a lot of people think about it like, they think about it as like, oh, I'm in my 50s. It's too late to get into this because I need more short-term gains. But I think it's really, really short-sighted in that sense. How do you think about that?
Well, Renee and I bought our very first property in 2012 at the bottom of the market, $83,000 for a 4-bedroom, 2-bath JWB property. And if we did not refinance that house to buy the next house, if we had kept our mortgage exactly as it was, we would be making a $700 positive cash flow every single month. Would you believe that? So it went from like being positive cash flow of $200 to now what would be the equivalent of $700. I think that's amazing. And I love it how Bill Green's in here doing some math for us. Yeah. So 72 divided by 10% interest, 7.2 years to double. So I don't know. I mean, but then we keep accumulating, right? So I'm not really good at math. I have to call Lee Bishop and Drew Barnhill, and now I'll call Bill Green for some math help, because honestly, I'm a great creative, but when it comes to math, I'm like, help. Which is why I love JWB, because they do the math for me. So I'm not ashamed to admit that I'm a successful business person, but that's why I have a professional bookkeeper and accountant.
You are a great creative. I think what you're bringing up is interesting, right? Like, you chose, instead of having $700 a month, you chose buy multiple other properties so that, you know, because you're not worried about cash flow today, right? Like, you're not living off that cash flow today. You're living off of your business today. But if you can accumulate wealth for the time that you need the cash flow, right? The cash flow tomorrow, when you are ready to hang it up in 20 years or so, or 30 years, whatever. Like, I think you got a lot of years in you, Jen, because you look young and you got so much energy, right? But like, when you are ready to hang it up, now you're living off of this nest egg that has been compounding, instead of just like worrying about short-term cash flow and stuff like that. I think that's really, really cool.
And I think it's funny that after just 2 years of owning the houses down in Jacksonville, my portfolio the net worth went from 785 to like 1.25 in just a couple of years, you know, and all of a sudden you're an accredited owner, an accredited lender, because you have $1 million in assets, you know? So that stuff all adds up. You'd think, well, what do you do with that? You know, well, I don't need to do anything with that. Keep collecting rent.
Yeah, keep collecting rent, keep letting it compound, keep that rule of 72 going, man. That's awesome, dude. That's awesome, man. All right, well, let's talk about the property a little bit. And I just, by the way, community, you're here, right? So any questions you have about the property we're about to show, any questions you have about Lee or Jen's or my investing journey, totally open books here today. But for right now, I'm gonna magically whisk us away here to 3082 Jennings Street, Jacksonville, Florida, 32218. It's a 3-bedroom, 2-bathroom house, 2-car garage. It's leased at $1,453 once it's complete, because this is currently under construction, but should be ready here soon. And appreciation rate of 4.6%, right? The best in class stuff that we like here in the Jacksonville market. And this is what we're all buying here, right? This is what investors really care about, is this passive 11.56 IRR investing. Normally when GC is here, he likes to say what he loves about this property. Since he's such a prepared guy, he wrote me a couple of notes so you all know what GC loves about this property is the 3 things you should be looking for as an investor right now. 1, does it beat inflation? Yes. 2, does it mitigate risk by having positive cash flow? Yes. 3, is it passive so you can work on your active income and not have to worry about this thing? Yes. What other investments are there out there that you can say that about currently? Not stocks. They're definitely not making you money or beating inflation right now. Not bonds. Definitely not beating inflation for you right now, right? Like, to Lee's point, not much outside of buy and hold real estate, right? Like, can you do all that stuff? Mitigate risk, beat inflation, and be passive. So something else that he likes about it, though, that's the whole asset class. But this is 225, right? We've been seeing the houses, the pricing go up, right? This is a lower purchase price, given that it's a new construction home. This is a ground up new construction home for $225K. Normally, these new construction homes are $250K plus, and new construction has this right here, this maintenance rate that comes from the JWB data flywheel. They keep the maintenance numbers between renos and new construction properties, so that, and all these are real life stats from the 4,700 properties that they manage. This should only have like a 4% maintenance rate. That's something people tend to like a lot. So that is what GC loves about this property. Jen, I'll start with you, since you're the most recent purchaser of homes here in this group. When you look at this property, what are you looking at? How does it compare to stuff that you're buying, or what do you like about it?
Well, you know, I look at price. I always look at price first, because it's like, can I afford it? And whenever I call up JWB, I'm like, what's the cheapest thing you got? Really? Yeah. So I always look at price, and then the next thing that my eyes go to is the return. But then I gotta say, I'm guilty. I always look at the pictures, because I love how cute the JWB homes are, whether they are new construction or whether they're remodels. You can always tell a JWB house because it has a certain look, and they're adorable, and yay.
Awesome. Awesome. That's interesting. You know, that order, Jen, I think like a marketer, right? And I'm always thinking, are people thinking, is this interesting? Do I trust it? And is it for me? And the way that you kind of just said that, right? Price is kind of like, is it for me? Right? Because you're looking, can I afford this thing in that order? Then the second is the return. That's probably like, is this interesting? Right. And then do I trust it is kind of like, it feels like if you see a pretty picture, you're like, I'm probably going to, I like it. Right.
Right.
So that's an interesting paradigm. Lee, when you look at this property, bud, what are you looking for as a savvy investor that you are?
Oh my God, you're killing me. I just went to the conventional analysis down from downloading the thing, and it's showing that the negative cash flow in the first year, which that wouldn't concern me. In the second year is a little bit less. And then the third year you start making money. But by the third year, I had already refinanced my house so that I had positive cash flow on it. So even though you're putting the 25% down at 6.25 for a 30-year mortgage, you know, puts in a negative cash flow, I might end up putting more down so that I didn't have a negative cash flow right out of the box. That's what I was looking at. Just when you stumbled on me, that's what I was looking at.
Okay. Am I looking at the right thing here? So I see this as negative, kind of like cash outlay, but it looks like year one, it's positive. Oh no, this is.
No, you got to go up.
Oh, up here.
Scroll up a little bit.
Got it. These are the cash flows here.
Yeah, there you go.
Oh, there we go. Okay.
Yeah. Sorry,
I
should have pointed that at you.
No, I like it, man. Listen, you're just showing that I'm really not the expert here. You are, right? So I'm zooming in for everybody. Year one, it's a little it's negative 674. Year two, negative 230. Year 3 through 10, it starts to get real positive. But Lee, you said something really, really interesting, man.
Yeah.
By year 2 or 3, you're refinancing. Can you explain that a little bit?
Well, you're either going to do a cash out refinance and invest in another house based on the equity that you're building up on this so that you can put a deposit down on the next house, or you're going to generate more. Either way, you're going to generate more cash flow, but you're trying to look for leverage the interest rates, right? So you're trying to pay them down or get a better rate. And I'm assuming in 2 years that the rates are not going to be the same as they are now. Everybody's talking about, oh my God, the interest rates are going up. Interest rates are going up. They're still lower than they were during the 2007, 2008 crash, right? So you're nowhere near that mark where, like my wife, when she bought this house way back when, 30 years ago or so, she said, oh, it's 10%. If it goes down to 9%, I'm going to lock it in. You know, it was one of those conventional bubble things. And she locked it in and it went down to 7. So my thought is interest rates are going up now to try and curb the inflation. As soon as this inflation bubble, you know, they realize they're not going to be able to do anything about it. And this is just me talking. I think the interest rates are going to start dropping again because they're going to have to see that they got to start moving houses again. And the whole raising of the interest rate is to slow down the housing market, which is crazy. You know, that's where that's where the money is moving. Then we got to get rid of this money that's in this cash deficit. I mean, this cash, we got so much cash out on the market that the inflation is trying to eat it up. If we have the houses selling, it does that for us, you know. And I don't know what they're thinking. The Feds, they're crazy. They get more money than I do to think more smart than I do.
What do you think about that, Jen, when you're hearing Lee say that stuff? Are you familiar with all this stuff? Is this new to you?
You know, I've lived through the lowest interest rates in history for so long. Like for us to remember, what was it? Back in the 80s, we had high interest rates. Mm-hmm. And then when I bought my first house in 1998, that was the house that I lived in with the first husband, not the dream husband that I have now, but the first husband, the starter marriage. I think our interest rate was something like 2.5. Mm-hmm. And so we've been at historical lows for so long. It's like, okay, well, now the property we just bought was 7.35 interest rate, which means, okay, so here's the math on mine. Somebody who's a whiz kid, you guys can figure this out. Let's see, $145,000 property. I put $45,000 down. The loan is on $100,000. 7.35 interest rate. I think my mortgage is something like $999. So is it going to be positive cash flow? I really don't have the answer to that, but I still know that it's going to be having the 5 profit centers. And so it really doesn't matter. It's going to be a win over time. And since I'm buying and holding, who cares?
Yeah. Yeah. I think that, and we can get into what the 5 profit centers are since we got a bunch of new folks here and we can talk about that. But I think what I'm hearing you say is essentially, where else am I going to put this money?
You know, there's that, because I already got my money out of the stock market. It's not going back in. Nope.
Yeah.
So,
Yeah. You know,
and sitting in my savings account earning like $1, like, no.
Yeah. Yeah, totally. I find it really, really interesting, right? Like I find it really interesting that we're in this period where I too, Jen, right? Like ever since I've known it, interest rates are low, right? Like the Great Recession happened right when I graduated college. So it's funny for me to like look at this stuff and see interest rates going up, but to the point that everybody's making, and also in the chat, is this idea that, you know, and really to the point that Lee made, is that if you buy a house today, chances are it's not going to go down in value. The rate of appreciation may slow down some, but we've seen history prove that even in recessions, there's only been one time that housing price drops, and it was because it was caused by housing price, by housing. So prices are still going to continue to appreciate or stay even. And if you were to put your money in this asset class right now, in a couple of years, we expect interest rates to go down. So at that point, you're going to be able to have captured that appreciation and then refinance to a lower interest rate, lower the monthly payment, take out that equity, and be able to reinvest that money in a great way is kind of like what Lee is saying. So just the buy and hold mentality of keeping this thing, it's going to stay cash flow positive, or it's going to get cash flow positive within a year or two, and then interest rates are going to drop. So you're going to get an even better rate. Plus you're going to have all this equity to play with, to me is, you know, not an average investor move, but it's the type of stuff that we talk about here all the time, which I think is super, super powerful.
Yeah. Now,
I mean, the other thing I'm sorry, Jen, go ahead.
Oh, I was just going to add. So for those that are not familiar with the Jacksonville market, one of the reasons why I'm such a fan is I grew up there. So I was born in Jacksonville, Arlington section, grew up in Orange Park. So those that don't know me, I go and visit like every quarter to go see family. And since the 1960s, Jacksonville has been on a tear, growing. And people ask, well, how is it that Jacksonville can always be growing? How can it always be building? Well, Jacksonville is the largest city, acreage wise, in the entire country, because Jacksonville is all of Duval County. Yeah. And so they don't have the limitation on building like a lot of other places do in California, Washington State, Illinois, etc. So whenever you want to build something new, you just mow down some trees and, you know, build a new subdivision. So Jacksonville is a very unique place that they have not seen the devastation of real estate prices like other parts of the country did, because there's still room to grow. And it is a major Navy base. It has a lot of industry. A lot of companies are moving their headquarters down there. So to add to it, I don't worry about the interest rates, because I know that Jacksonville is a really safe place to put my money for real estate investment. So there you go.
Yeah, that's risk mitigation, right? The idea that you're in a rapidly growing market that's been growing for the last 10 years, that only keeps climbing the charts on how much it's growing. The net migration is huge. I'm one of those data points. To your point of like space in Jacksonville, I'm always shocked, right? Like having moved there 4 years ago from Miami, I'm always shocked how like we'll go out to like the restaurants on Saturday night and my wife and I are just like, it's going to be slammed. And you get there, you just get a table immediately because there's plenty of space. Or this like last midterm election, my sister was just talking about how like, oh my God, voting is such a pain in the butt. I literally was pulling into the election, to the election place as I was talking to her. I was like, all right, well, I'm just going to go vote real quick. Hung up the phone, walked straight into the library, voted in like 2 minutes and walked right back out and called her in under 5 minutes. I was like, this place is not dense. Like there's plenty of space to grow. There's still a ton of quality of life, right? There's still people trying to move here, companies trying to move here. It got accelerated by COVID, and it's just not going anywhere because it's got that mix of great weather, very livable, low price housing, the beach, and, you know, more
Industry.
and more companies building headquarters there, which is pretty incredible. Lee, what were you going to say? You had something to say before Jen talked about Jacksonville.
Oh, I was just looking at the house again, based on what you have and what I liked about it. I used to be worried about the septic, and now I'm not worried about the septic because JWB has that plan in place, that insurance plan for any septic that they put in. It automatically, they have almost like an insurance policy that the tenant pays, which is awesome, I think. So I was looking at that. Not that that would scare me at first, but I used to go, oh man, I don't want septic at all. I want to make sure, so, and
Cool.
I thought the square foot was a little bit small at
I mean,
1,200 for a
it
new
is.
build, but
It's a 3-bedroom, 2-bathroom home at 225. So it definitely is going to be smaller than the
Perfect.
other ones. But
it's
this
a
this
perfect
feels
price
like
point. Yeah.
as like a, for me and my family, right? Like I'm like Marta and I who don't have kids, and all we need is like her art studio and then like a guest room / home office for me. Like this would be a perfect place to live.
Oh, yeah.
Seems
Yeah.
like an awesome little spot.
3.2 is what I was buying with 2-car garage.
Yeah.
That was my buying. When they said you're looking at widgets, I said, yeah, I'm looking at widgets, but my buying criteria is 3.2, a new build.
Yeah.
So I made him fight for me.
I have a 2.1, a 3.2, and a 4.2. So like I have kind of like different housing stock on the ones that I've done. I don't see any questions about the property or anything like that. If you can, like, how the heck did you buy 3 homes in 1 year? Like, where did you get the money from? Did a rich aunt give you some money or something like that?
No.
Like, how'd you make it happen?
No. Well, first off, the fabulous MVP Lee Bishop held my hand when I started talking to him in late 2021 about this self-directed IRAs. I don't know, man. I'm scared. And I had been wanting to take my money out of the stock market for years. And always my financial planner person, who's a friend, was like, oh, Jen, that's so scary. That's not a good idea. I love you and I want to protect you. I really don't think you should do this. And so I got talked out of it so many times. And then finally it was like, yeah, I finally feel from hanging out with this crowd, from sitting in these podcasts twice per week since 2020, I finally am feeling like, yeah, okay, I know what I'm doing. I feel confident, but I didn't know how to do it. And so I spoke with B. Harris, who's up in Pittsburgh, and she told me about her story. And I knew that Lee was very seasoned in it. And I said, okay, help me. So Lee literally walked me through, okay, step 1, here's who you call. Step 2, here's who you call. Step 3, here's what you do. And so when it came to December, I started doing all of my work in getting self-directed IRAs set up. But then it took a while for my money to transfer back in January. And I remembered because like it was the top of the stock market in, at the beginning of January. And I was like, I want this money to get out. And I was so pissed that I lost $13,000. And that was like mid-January. Boy, am I glad I only lost $13,000 compared to the poor folks. Anyway, I'm just, Lee, honey, I know this. I say this about you all the time, brother. I love you. You saved me. Now I had to have 2 IRAs because I have a traditional IRA and I have a Roth IRA, and they're in different silos. So if you look at my bookkeeping, which is why I have to hire a professional because it just gets so confusing. Renee and I have 4 properties in a regular checking account, conventional loans, 4 of them in this one account, and then 1 house that I bought outright in cash with my traditional IRA, and then 1 house that I financed with my Roth IRA. So 1's paid off, 5 of them have mortgages on them, and never shall the money cross. So if I'm short in my Roth IRA, I cannot take money from my traditional IRA, and I can't take money from my regular. It's just I gotta tell you, I'm organized, but it is a bit much. But you know what? I don't care because I am self-employed. I do not have a pension. I do not have the rich aunt who's going to leave me stuff. Now, you asked about property number 3. Well, because I am a self-employed, and because I have a team, my marketing agency is 13 years old. Last year, one of my clients, or was it this year? I'm losing track of time. Maybe it was this year.
Last year.
Anyway, one of my clients said to me, hey, they've got this, the CARES Act has this, and I can't remember what it's called, but essentially, did I overpay in my employment payroll taxes? And do I qualify for getting a rebate from the government because I can prove that I lost money during COVID? Now, I never was able to take a PPP loan, and I only got like $5,000 from the EIDL grant, which happened at the beginning, but I never qualified for a PPP loan. And I just kind of sucked it up throughout all of COVID. But I got this number and I figured out, like, okay, if I go through this and I prove that I lost money, blah, blah, blah. Ultimately, I got $71,000 back in rebates from overpaying in my payroll. So that's, hey, when you get a rebate, that's like free money, right? Like manna from heaven. So I was like, okay, I went to pay a few bills off, and then 50 grand, that's going to the next house. And I just had to wait for my taxes to be done, because it's just been a financial challenge all year. But I had to wait to get my taxes done until early October. So yeah, it's been a mess, but that's why it's taken me so dang long. I was hoping to take advantage of that deal that JW is offering, where they help you lower your interest rate points or something like that by October 15th. But October 15th was when we were getting my deal started. So,
well, you know what? Good on you, Jen, right? Because I think there's a lot of people, this goes to highlight this not your average kind of mindset that we have in this community, right? Like a lot of people, whether they get a windfall from like an unexpected rebate, or you get a big bonus, or you crush quota as a salesperson, you think, what can I go buy with this money? And instead you thought, man, I'm just going to stick this thing, park this money to start making money for me for when I need that cash flow tomorrow, right? Like, I think that's really, really smart. And quite frankly, good on you, Lee. We're just talking here in the chat of how we have all these community members that are resources to everybody else. And Lee, your name gets brought up really often about this, man. I know that you spend a lot of time with people on the phone. Drew does too. And I think a lot of other folks are doing that, man. But where does that come from, man? Like, where do you in the last 3 years that we've had this show, you've probably spent 60 hours on the phone with people that you've never met before, that you meet on a Zoom chat and you get on the phone with people. Where does that come from, man? That's so incredible.
The whole reason why I got into real estate is to help people, right? I mean, honestly, people that need, there's always going to be somebody that has a financial problem or a financial situation or a financial solution that needs help with, right? They're not in pre-foreclosure because they want to be, they're in there because they got a problem. You got to find out what the core problem is and you want to help them. So the people in this chat are just like family to me, right? So
true. We love you.
It's awesome, man.
Yep. This is our family. We are a JWB family for sure.
Yeah.
Gregg and JWB and those guys
love you. Right? We owe our lives to these guys. Yeah.
They took care of us. So whatever I can do to give back.
Man, it's incredible, man. Thanks, Lee. Thanks for that, bro.
That's why I put my phone number out there. That's why I put my email out there.
Love you. And you really are. I mean, if there are two kinds of people in this world, everybody. There's Lee's friends and those that Lee has yet to meet. So call up Lee and get some magic from Lee, because he's amazing. And, he's just a really great, genuine human being. And then there's Jane, who never comes up on camera, but she's just as awesome as Lee is.
Yeah. My wife is my backbone. She's my rock. And I do this I want her to be proud of me. That's my why. So that's why I do it.
Love you. Love you. Don't we have the best community? I mean, okay, if I could just brag about our community, we started these meetups because it was June 2021. Renee and I are in Atlanta. And I'm on the property of the week with Renee. We're in a hotel room and I'm like, hey, everybody, I'm in Atlanta. Who's around? Let's get together. And the ringmaster, Drew Barnhill, is like, I'm local. Let's connect. So we did. And that was our first unofficial meetup, because we were all so desperate to finally meet each other in person after all being quarantined and learning about things on the show. And then one thing led to another, and we've met up in real life in Atlanta, Jacksonville, Pittsburgh, Denver, Seattle.
I love these new people that get on here and say they met Pablo at the Ignite, and it was like, oh, I'm seeing a superstar from
That was nuts,
the show.
man.
I was like, oh my God, if they knew him, how much energy he has and what a star he is in everybody's eyes around here. You really, they say, every community needs somebody that's going to be that foundation. And Pablo, you are this foundation here, whether you want to admit it or not. I know you say you're a host and everything. Gregg is a superstar, but you are the glue that got this whole thing going, man. We appreciate that.
Yep.
I consider you a friend, and we've met twice in real life.
That's
but we meet each other all the time on the phone or on this thing, or I see you once a week now. So, well, more than once a week, but I consider you a friend, and that's just. It's great to me to help friends. And I consider all these people on this show, anybody that gets on that chat and wants to chat and talk and everything. And I get people call me up, and I don't even know I'm making an impact on them, but I know that I am helping them get over that hurdle, get over that fence, not because I am a paid JWB employee, but because I believe in JWB and what they're doing and helping people and helping neighborhoods, and they have the right foundation for doing this stuff. So I give it my all if I can. I'm doing this out of love. That's all.
You're amazing. You're amazing. Well, thank you for holding my hand, because I was so scared with self-directed iris. I didn't know what I was doing.
Yeah.
I mean, I so wish everybody that I was this math genius. I am not. I can write a novel in 43 days. No problem. But doing math, I look at this spreadsheet and my eyes just go.
Yeah.
Jen, real quick, this is in the chat. They're talking about what is the non-recourse rate these days. You bought inside your IRA, right? Do you remember kind of what your rate was?
Now, granted, that was April, so I don't know what it would be now.
Oh, okay.
But
So
I think it was 7.5.
Yeah. Yeah.
No, when I got it at first year I got it in 2019, it was 7.5, 2 points. And then when I refinanced, it went down to 6.75.
Yeah.
And so
it feels like
Drew says it's 9 right now.
Yeah.
Drew says it's right around 9. David's saying in the high 8s or 9s. That makes a lot of sense.
Yeah.
I kind of wanted to just circle back to, you said some really nice things, and you've all done some really incredible things for this community. And for me, as you all know, I didn't know anything about this stuff when I started this. For me,
we know.
I was, yeah, right? Like it took me a
We were
year
there
to
at the beginning.
Rich Dad, Poor Dad. And it, for me, it really was this idea. This was before we knew COVID was going to happen, right? But it was what I learned at my brother's funeral is that nothing is more valuable than community, right? Like nothing can really help you in all facets of life, including the hardest facets of life, than community. And we started this thing, credit to Gregg of like believing that, my crazy little idea that he had never heard before, just because he had heard everything else that he had heard, he was like, all right, I'm willing to try something new. And this guy's making some sense. But I do think that the idea that the majority of the people that come here every single week, that we went through those 2 years of COVID together.
Yeah.
Right. Like that is a truly, truly bonding experience, right? Like Lee, I met you January 2020. And then all of a sudden, man, the world completely changed. And we all went through like this really, really dark period of history, but spending time together, I think really, really bonds people. And for me, it's like a dream come true to see this thing come full circle from this like realization at my brother's funeral to proving this thing on like a giant stage in a way that is allowing people to, to build wealth and change their financial futures and stuff like that. So I wouldn't be able to have done it if the two of you weren't showing up to this thing, and Drew and Marilyn and you know all the people that were here like early on and cheering this thing on. So I it's really, really special. Whew, man, we got deep there. So Marilyn Cotterman from Homosassa, Florida,
home of the manatee.
home of the manatees. She asked, "Who is Robert Kiyosaki?"
Oh, geez.
Anybody want to answer that?
I have a whole bookshelf dedicated to his stuff, like all that right there. The author of Rich Dad, Poor Dad. A lot of us have read that book, and he shares about what he did in investing in real estate to have an early retirement. And so that wonderful man has started a wave of people wanting to learn more about how they can invest in the real estate market. And I'm so glad I read that book back in 2008. I've read it several times over and over again. And you know, does anyone else feel like they're not making much progress, but then they just kind of look back 10 years and go, oh, wait, I really have. But, you know, especially if we look on social media, right, we're seeing everyone's A-rolls, you know, everyone's driving that really nice car, and they're going on these trips and they're doing all these things. And so, and they're thin and they're beautiful and they're rich, you know, that all that crap, right? And we look at it and it's like, oh, I'm not there. I'm such a loser, right? No, it just takes time, right? It takes time, and it takes consistent persistence in reaching your goals, whether that be as a business owner, as a real estate investor, as someone who's going through a training program or going through college. We're all growing and learning and evolving. And this is a lifelong pursuit of constantly keeping up with what's new. That's what's so beautiful about Gregg Cohen and Pablo Gonzalez as they put together this show, because we talk about the same topics over and over again, but it changes and evolves with where we are in this segment of time. So this community is amazing, and I'm just thrilled. Yes, a lot of bad happened in COVID, but I choose to see the good in every situation. And I am so, so grateful to JWB and this amazing Not Your Average Investor show.
I don't think people realize, you know, the asset that we have with access to Gregg Cohen like that. I mean, he is the man that went through the course that almost everybody that's been through Fortune Builders courses have gone through with Van and Paul in the beginning. Gregg went through that first class, and that, you know, for him to adopt the stuff that Than was saying and say, yeah, let's beautify a neighborhood one at a time, you know, one house at a time. He adapted that and made that personal for him in his quest, right? To make, I mean, what a cool thing. And for us to have access to him week in, week out, and to be popping questions to him, and he fires them off, or he doesn't. If he doesn't, he says, hey, contact my group because my group knows. I'm like, you have no idea how much that means to me as an investor in you know, getting just purchasing the houses, right? I got the 5 houses. I can't wait to buy more houses, you know, and I'm trying to establish that. But just to have that access, Pablo, and you made that happen. I mean, you said, hey, Gregg, you know, it would be a good idea if we had this show. You were running one morning with Gregg, and I said, man, Gregg said, what?
Lee, when I came up with that idea, it was just based on the fact that I knew that people that invested with JWB were different and had like a lot of value to offer. Yeah. Never in a million years, I'm being 100% honest, never in a million years did I realize who Gregg Cohen was. You know what I mean? Because he's so humble,
down to earth, easy, approachable.
Super, just the nicest freaking dude you'll ever meet. And you know, being there at Fortune Builders this weekend was a full circle for me, because I realized I'm like, hundreds, you know, like thousands of people have gone through this program. How many of those people have gone through this program and then created a 100-person company that wins Ernst & Young Entrepreneur of the Year awards, that wins Best Places to Work, that is buying 19 city blocks in downtown Jacksonville and placemaking in a major American city at a major scale, and the greatest communicator, father, friend, you know, like person that I know, man. So for me, like, it was the ultimate wild card of just like, we first started doing this, I was like, man, this dude's different and this company is different. And to me, that's fascinating. And now we talk about it all the time, right? In my company, because we sell this whole like idea of a, internet talk show as a go-to-market function, the way that we've implemented at JWB. But like the value to a clientele to have access to the CEO of the company that they're spending their money with in a very frictionless manner, and have that person be a foremost expert in not just the thing that you're doing, but also in building businesses and in, communication structures and all this other stuff is man,
Right.
like I have goosebumps talking about it right now. It worked out beyond my wildest dreams. And it is because that dude and this group of people at JWB that they've built are really, really special, man.
He had the foresight to say yes, which is incredible. Says volumes about Gregg. For him to say yes to you, you said, hey,
100%.
I know I could help you with that. If you really want to do that, Gregg, I can help you with that. And you had probably had no idea how this flywheel was going to just take off, right? And all of a sudden it's like, oh man.
Yeah, it was about 6 months in before I was like, I think this thing I'm doing with him is on pretty solid ground here. The first 6 months, I was just like, I don't know what's happening. I just hope this works.
Right. It was like 10 people in the beginning, and then all of a sudden it's like 20.
Yeah.
And then all of a sudden it just started snowballing. And I mean, if you didn't have the right format, if you didn't talk about topics that matter, if you didn't give us access to Gregg and have him talk to us about what JWB is doing, it's so cool. I mean, how can you not just be enthralled in what JWB is doing? I mean, it's just, I was going to wear my JWB swag, but I was like, somebody would say I'm an employee.
Yeah. People already think you work there, Lee. People already think you work there, just like me.
Well,
all right, y'all.
Also, one more little thing to add. Okay,
Please.
so when COVID was happening and people were going to these online meetings, whether it was Zoom or that, we were trying to figure out what was the best platform. Zoom became the best platform. A lot of webinars were taking place. Some of them didn't allow the chat to be enabled. It was just talking heads. I mean, we were going through an evolution of how we could build a community and have these things be interactive. And not many businesses had the balls to allow people to be in the chat.
Yeah.
And honestly, it's the fact that this show encourages people to be in the chat talking about go Knowles. Yeah, Marilyn, to all you Gators people. Anyway, but the point is that we've got this chat and we're making friends in the chat, and we really are able to engage even if we aren't necessarily seeing each other. So it's beautiful. I know it's such a love fest here, isn't it?
It is. Every time he's not here, we always like, I don't want to say devolve. We evolve into a love fest. I love this stuff. And like who wants to go to a webinar? People want to go to a show and people want to make friends. Like, so.
You and Gregg have a good chemistry together though. You do entertain us, because I spend a lot of times laughing, at you guys. The banter is genuine and it's fun.
So funny. Yeah.
And PG most of the time.
Well, listen, I appreciate the two of you hopping in here on short notice, right? It ended up Gregg was in business planning, and I needed some wingmen and a wingwoman to run this show today. And that's the other value of the community, right? Like even on my own show, right? Because I do this same thing too. If the internet goes, if my guests can't make it or whatever, having this community allows us to still show up, still add value, still have a great conversation, still spend some time together. And we couldn't do it without the folks that show up and contribute to the chat week in and week out, like the two of you who are today happen to be on the stage, but everybody else in the chat, like we just can't do this without you, right? So like, I never take for granted the idea that this is the middle of a workday, you're taking an hour out of it. And I'm just so grateful that I get the privilege of just being here in front of everybody and make these amazing relationships with you, Lee, with you, Jen, with Bill in the chat, and Marilyn and Leo and Drew and David, like everybody there just really, really means the world to me. Do you all have any kind of like last words to say goodbye to everybody for today?
Well,
go ahead, Jen.
Go ahead. Well, I'd like to do a little treatment, a little prayer for everybody, because as the fairy godmother of the Not Your Average Investor community, I want everyone to think of their wish for their real estate goals, right? Close your eyes and may all of your real estate wishes come true.
Yeah. All right. How about you, Lee? Send us away.
I'm going to say, if you're going to be an investor, Don't be an average investor.
Oh, you took my line. And if you're gonna have a sign up on a show, do not make it an average one. I'll see you all next week.